Today we're tackling a hot topic. Could gold-backed crypto tokens be the answer to our inflation woes? Let's dive into what these tokens are, how they might combat inflation, and whether cryptocurrencies not backed by the tangible assets like gold are really worth anything. First off, what are gold-backed crypto tokens? They're digital currencies where each token represents a specific amount of physical gold stored in vaults. This isn't a new idea. It's a reminiscent of the gold standard, where currency had direct value based on gold reserves. But in the digital age, this concept merges blockchain technology with the stability of gold. Inflation, in simple terms, is when money loses its purchasing power over time, often due to an increase in money supply. Fiat currencies, the kind we use daily, are backed by nothing more than government decree. When governments print more money to stimulate the economy or pay debts, inflation can spike. Here's where gold-backed tokens come in. They potentially offer a stable value because they are tied to something with intrinsic value. So, how does this tackle inflation? By anchoring digital currency to gold. Gold has a limited supply, which can't be inflated at will, unlike fiat money. If each token equals a set amount of gold, the token's supply is naturally limited, potentially stabilizing its value. Gold has been a store of value for millennia. If economic conditions worsen, people might turn to these tokens as a hedge against inflation, increasing demand for the token while the supply remains constant or grows only with mined gold. Blockchain ensures transparency. Every token can be traced back to actual gold, potentially reducing fraud and increasing trust in the currency. Unlike physical gold, these tokens can be transacted globally with ease, democratizing access to a stable asset. But remember, this isn't a silver bullet. The effectiveness depends on how well the gold backing is managed, regulated, and how closely the token's value tracks the gold market. Now, let's get controversial. What about cryptocurrencies that aren't backed by anything tangible? Bitcoin, Ethereum, and most altcoins derive their value from nothing. Their value increases with the user adoption, much like social networks. Utility ones, many are used for transactions, smart contracts, or as platforms for decentralized apps. Speculation, a huge part of their value is driven by speculation, hopes of future utility, or the greater fool theory, where you sell at a higher price to someone else. But without intrinsic value, their worth can be highly volatile. They don't tackle inflation directly. They can either be an inflation hedge if they gain in the value, or exacerbate personal inflation if they plummet. The value is based on belief, not on a physical asset like gold. Introducing gold-backed tokens could be revolutionary, but it's not without challenges. How will governments react? Will they see it as a threat to monetary policy control? Let's look practically. How do you ensure each token always corresponds to real gold? There is a risk of fraud or mismanagement. What about market dynamics? Gold's price can fluctuate. Will this stability really be achieved? Yet, if managed well, it could offer a decentralized, inflation-resistant currency alternative. The question is whether we can trust systems to maintain this linkage accurately and transparently. So, are we looking at a new era in currency with gold-backed crypto tokens? Or are non-backed cryptos just digital tulips waiting for the bubbles to burst? Let's keep this conversation going. Leave your thoughts in the comments, and if you want to explore more about the intersection of economics and tech, hit subscribe. Until next time, think about what really gives money its value.